Well, the early trading on Monday saw some fluctuations in Chinese markets as investors evaluated the possible effects of the assistance measures announced by the Finance Ministry over the weekend. On the other hand, bond investors are playing defense as confidence in the Federal Reserve's ability to lower the rates wanes. The CSI 300 index seesawed between a 0.4% loss and a 1.7% gain. It had capped its worst week since late July on Friday. The Chinese developer index showed little movement, followed a 4% surge, while Japanese markets were closed for a holiday. Benchmarks in Australia and South Korea rose. Stocks in Hong Kong, meanwhile, dropped. US stock futures fell after hitting all-time highs last week. Friday saw the S&P 500 break the 5,800 mark, notching its 45th record for the year. Large bank stocks rose on JP Morgan Chase's announcement of a surprising boost in net interest revenue. The US dollar advanced on Monday after rising for a second week as traders paired expectations on the pace of Fed rate cuts. Now, the combination of sticky inflation and weak labor market figures last week, it led traders to trim bets on the degree of Fed easing in 2024. This drove yields to the highest since July. Meanwhile, a closely watched measure of expected fluctuations in treasuries rose to the highest since January. Commodities steadied as China pledged more support for growth. Metals have rallied in recent weeks on government support. But demand concerns remain as Beijing stopped short of any further stimulus measures. Oil declined after China's highly anticipated Finance Ministry briefing on Saturday, which lacked new incentives to strengthen consumption on the biggest importer. With the specter of Israeli strikes in Iran hanging over the market.